Hey everyone, I know there's been a lot of discussion surrounding Vertiv in the latest few months given its position in the artificial intelligence market. So I wanted to go over some of the latest details of the company's performance to highlight why everyone is talking about Vertiv stock. So let's get into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So one of the reasons for it is there's an intense focus on thermal management lately, and rightfully so. As the market leader in data center cooling, we are uniquely positioned for that opportunity. And what the management is talking about here is liquid cooling for data centers. Now, you know that these data centers consume significant amounts of energy, and that energy causes an overheating. And you've got to cool those data centers. You've got to cool the temperature in the facility, but also surrounding the GPUs and the computing technology. And more importantly, the latest innovations in GPUs from NVIDIA are going to require liquid cooling. So this is all playing right into the hands of Vertiv, and that's why investors are anticipating that as enterprises build out these data centers, which is estimated to be roughly a $1 trillion upgrade cycle, they're going to need Vertiv's products, their liquid cooling solutions, as part of that whole process of building out that data center. It's not only NVIDIA GPUs that you need to build out these AI factories, as they're now being called. So that's why investors rightfully and understandably have shifted their attention to Vertiv as one of the companies that is in prime position to benefit from the growing demand in artificial intelligence. The company goes on to say that in the latest quarter, favorable price and cost and higher volume allowed the company to exceed the high end of their guidance, driven by sales beat and higher productivity than expected in their model. So they were expecting a certain amount of operating income for the quarter. They actually delivered $249 million in operating profit, which exceeded the high end of their expectations, and that was driven by those favorable price and higher volume. So many factors worked in its favor in the latest quarter, and it all led to growing operating profitability, which is something I focus on meaningfully, right? You've heard me talk about sales growth is not impressive if it doesn't come with increased profits. What's the use of growing your sales if it's not going to boost your profitability? Ultimately, you want to boost your profitability longer term, more importantly. So if sales growth are not leading to that, then why bother? Why are you going after those sales? Raise your price, change your terms to make sure that when you do complete a sale, it works in your favor. Don't just make the sale and give up all kinds of negotiating forgivenesses to secure the sale. That's not worthwhile. I like companies that grow revenue and profit simultaneously. Vertiv is certainly doing that. Now, over the next 5 years, the analysts on Wall Street that are following Vertiv Holdings, they expect its earnings per share will grow by 28.3% each and every year over the next 5 years. So their profit expectations are robust, as well as their revenue growth expectations, which we'll see a little bit later in the video. They just upgraded their guidance on this as well. Management saying that they are expecting organic sales growth of approximately 12% in the next quarter and operating profit margin of 16.9%. This operating profit margin of 16.9% would be an increase of 240 basis points. That was up from 14.5% in the same quarter the prior year. So 240 basis points equals 2.4 percentage points from the previous year. Again, like I talked about, sales growth leading to profit expansion, which is what investors like myself like to see. For the rest of the year, they're increasing their estimate for organic sales growth from 10% at the midpoint to roughly 12%. So they thought sales were going to grow 10% this year. Since the year started off so strongly, they're now increasing that estimate to 12%. And operating profit also increasing. They previously said their operating profit would be $1.3 billion. Now they're saying 1.35 billion. So an extra 50 million in operating income expected for 2024, plus an extra 2% of revenue growth expected in 2024 versus their previous forecasts, given how strong the year has started in 2024. For earnings per share, they're forecasting adjusted EPS of $2.32 at the midpoint, which would be roughly 30% year-over-year increase for 2024. Now, that would be ahead of analyst expectations of 28% growth year-over-year for their longer-term 5-year trend of earnings per share growth. And they're holding the midpoint of their adjusted free cash flow guidance at $825 million. And you might say, wait a minute, they're increasing their sales expectations, they're increasing their profit expectations, but they're keeping their free cash flow expectations the same? That doesn't equal, right? One doesn't equal the other. And the big difference here is I didn't discuss something management said previously in their conference call, which is that they're also increasing their capital expenditure for the year. They previously said they were going to spend between 75 to 200 million on the year, and they now said it's going to be closer to 200 million. Given demand is so strong for its products, they're going to spend more to increase manufacturing capacity to make sure they can meet that higher level of demand than anticipated, right? Because you go into the year thinking you had a certain amount of sales you were going to hit, but now you're going to hit a little bit higher in sales. And so you went into the year thinking you had to increase your manufacturing capacity by a certain amount to meet your sales growth. But since sales growth is higher than you thought, you also need to increase your manufacturing capacity higher than you thought to meet that higher than expected revenue expectation. So that's how everything matches up here for Vertiv. And looking longer term, the CEO saying that the value of know-how strength in serving this market today is unprecedented in my long industry experience. So in other words, what the CEO is saying is the market, when they're looking to purchase liquid cooling solutions, the know-how is more important than ever. They're looking for companies that have the skill, the highest experience. So in other words, demand in this area is not for price. It's not looking for the lowest price. It's looking for the highest quality, highest priced, highest skill. So it's the premium end of the market that's driving demand because, as you'll understand, these data centers are very expensive to build out. So you don't want to spend billions of dollars on the GPUs, the real estate, and all of the other stuff, and then go for a budget option in liquid cooling solution, right? If you're spending all of that money, you want to go ahead and get the best in class for liquid cooling solution, which is unprecedented the way the market is looking for that premium end of the market, according to the CEO. So given all of these expectations and increasing forecasts, you can understand why everyone is talking about Vertiv stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.